Hello investors, it's Stuart Cruz and welcome to Cruz Asset Management's Chart of the Day. And today I'm going to highlight a piece that I sent out to a bunch of my clients on Friday. This is a reprint of a Forbes article that asks how the stock market has performed before, during, and after U.S. presidential elections. Because I'm often getting asked, what happens if Biden gets elected or if Trump gets elected? And the bottom line I normally say is the markets hate uncertainty. So what tends to be uncertain is an unknown election outcome or an outcome of an election where there's a complete sweep of the House, the Senate, and the presidency. If it's all Democratic or all Republican, then that means there are going to tend to be a lot more rule changes, a lot more laws passed, so that future is uncertain. If there's a split and then there's going to be less rules changed because less laws are going to be able to be pushed through one side or the other, then at least the players, the companies, know what the rules are and they can make adjustments and then make plans accordingly. But if they don't know what the rules are, if they don't know how they're going to be taxed, or they don't know what's happening, then they tend to reduce their planning and they tend to be more productive. So let's talk a little bit about how the market is done during a variety of presidential terms, presidential periods, if you will. And here's a chart. The growth of the dollar invested in the S&P 500 from January 26, so that includes the Great Depression, to December 2019. And what I noticed pretty immediately, I mean, down here you have a negative swing, of course, right leading up to the Great Depression. But outside of that, this is a remarkably steady move upward. Now, if you really take a slight closer look, the bluish gray, I guess, are Democratic, and the red is Republican. And so here in the bluish gray, you have flat and then up, Republican president up, Democratic up, Republican flattish, Democrat up, Republican up, Democrat up, Republican flattish, I would call Bush flattish, Obama Democratic up, and Trump up. So if I really had to look at this chart, I would suggest there are two periods that were flat, and those were actually under Republican presidents, which tend to be viewed as more business friendly. But the vast majority of the time, the stock market went up regardless of whether there was a Democrat or Republican in office. So what would happen if Trump is elected? I think the market will continue to go up. He tends to have very pro-business policies. Not all of his policies are pro-business, but the majority of his policies tend to be more pro-business. If Biden is elected, the thought is the taxes are going to go up to help pay for some of the stimulus program, and that will be problematic for the markets. That is economics 101. I can't argue with that. But under every other Democratic reign, the markets have also gone up. So you might have to balance your thoughts with those, with the historical perspective, and with what we think is going to happen. I'm also going to look at who do I think is going to win the election, and so I move to this chart. And so if I hone in on there, this highlight says the markets have been a major indicator of the outcome of presidential elections. The performance of the S&P 500 in the 3 months before has predicted 87% of the elections. So here's the chart that I'm looking at, and what this basically says is 3 months before, if the markets are up, and they're up on the average of 4%, the incumbent party won. And if the markets were down, the incumbent party lost. So we're about 3 months away from our elections right now. So we could mark this time in the sand. And if we thought that the markets were going to be, or we looked and see that the markets are up from this point or down from this point, we could probably be a pretty good indicator of who's going to win the election. At the end of the day, that traditionally seems to be what's happened. Like George Sr. Bush had a approval rating in the 80% deep into his presidency, probably a little bit more than a year out, which was one of the highest approval ratings of any sitting president ever. And then the economy went into a recession and he lost the following election, which was stunning if you thought, if you look back at his approval rating. So really, people just care how they're doing in the market and whether they feel like they are going to be they're doing okay right now, or if they're needing a change. And they probably need a change if they feel like the market's down or they're not doing very well. And let's keep in mind, the people that tend to vote are the people that tend to follow the stock market. And the people that tend to not vote, maybe the younger kids, tend to not follow the stock market as much. So that's probably why this is a pretty good indicator of who may or may not win. So we'll keep an eye on the markets from here on out. And if the markets are up, pretty likely Bush will win. If the markets are down, it's pretty likely that Biden will win. Okay, so stay tuned. And we'll probably revisit this in another 30 days to try and give us a report card. But this is Stuart Cruz with Cruz Asset Management. And don't forget to invest with the odds in your favor.